Assalamualaikum warahmatullahi wabarakatuh. Today our group will present about revenue cycle and case question number 6. Before we start, we would like to introduce ourselves first.
Okay, hi. Assalamualaikum warahmatullahi wabarakatuh. My name is NAIMAH binti LIAS and my matric number is 196326.
Hi, Assalamualaikum. My name is Hanania Suhairah binti RUSHDAN. My matric number is Y96509.
My name is NURHUMAIRA binti SUHAIMI with matric number 198519.
And my name is BATRISYIA binti NAZARULANUAR. My matric number is 199920.
So we begin with the processes involved in revenue cycle. Basically, revenue cycle begins with an order from a customer and then proceeding to the exchange of goods or services with a promise to pay, and lastly ending with the receipt of cash. First, receiving a customer's order. Company accept customers' orders for goods and services into the system with the management's authorization. And then second, approving credit for a sale means that orders received are sent to credit department and customer must be able to pay for the goods. Then third, shipping the goods. The goods are being shipped from the warehouse. And then fourth, billing the customers. Billing the documents such as invoices and processing billing adjustment for allowances, discounts and returns. And then next, collecting cash means ensure customers' order are filled with correct product and quantity. And lastly, recording transaction, ensure that all billing, adjustment and cash receipts are properly recorded on related accounts. And finally, the payment is received. And then next, the source of documents involved in revenue cycle are sales invoices, shipping documents, customers' purchase orders, credit approval form, open order report, sales journal. And next, customer statement, bill of lading, credit memorandum, right of authorization and packing slip. And next are the journal entries involved in the revenue cycle. For sales return, we debit inventory control, debit sales return allowance and credit cost of goods sold and account receivables. Second, cash receipt, we debit cash and credit account receivable. And for the billing departments, debit account receivable and credit sales. And then the accounts involved in revenue cycle. As we can see, there are many accounts involved, such as cash, sales, account receivable, sales discount, sales returns and allowances, bad debt expense, and allowances for doubtful accounts. Next, for indirectly related accounts, we have warranty expense, warranty liability, and also sales commission expense. Next, revenue cycle flowchart. We start from receiving customers' orders, second, approving credit for a sale, third, shipping the goods, fourth, billing the customers, and lastly, collecting cash and payment is received. So next, I would like to invite Hanania to continue this presentation.
Assalamualaikum. I would like to present on the identify internal control involved in revenue cycle. There are 5 components of internal control in revenue cycle, which the first one is control environment. Control environment may affect on the individual processes by implementing integrity and ethical values, may avoid from employees committing fraud in revenue cycle. Next, risk assessment. Understand how Auditor understand how management consider the risks that are relevant to the revenue process, estimate the significance, assess the occurrence of the risk, and decide the action to address those risks. The risks such as the risk of a new competitors and the development of a new technology. Next, proceed to control activities. Control activity is auditor identify what control to ensure that the assertion for transaction and events are being made. For information and communication, first conduct a walkthrough and make communication internally and externally in obtain knowledge of the process of the revenue transaction. Knowledge about the process, for example, knowledge about the process by which sales, cash received, and sales return are an allowance transaction initiated, or accounting records supporting document and accounts that involved in the processing sales and sales receipt and sales return and allowance transaction. Finally, monitoring activities. Monitoring activity is auditor need to understand the entities monitoring of control in revenue process. Monitoring and understand how supervisor, personnel review the personnel who perform the control and evaluate the performance. Next, identify the risk area in revenue cycle. I will present in the inherent risk factor that may affect on the revenue process. First will be industry related factor. Industry related factor means that revenue process may affect by the profitability and the health of the industry due to the competition within the industry and technological change. For example, competition may affect the pricing policy of the entities, credit terms, and product warranties. The complexity of the contentiousness of revenue recognition issues is when revenue recognized when a product usually revenue recognized when a product shipped or services is provided. However, there are some entities involved in some complex calculation. For example, like recognized revenue on long-term construction, long-term service contract. Finally, misstatement detected in prior audits. Presence of misstatement in previous audit is good to indicate the possibility of the misstatement that are likely to present during the current one. The auditor more aware of the same misstatement due to the prior audit procedure that have been done. It will help audits to assess the misstatement in the current year. Next, control risk setting for the revenue process. There are 3 steps, which the first one will be understand and document the revenue process. Understand the revenue process by conducting internal control that have been presented earlier, like control environment, risk assessment, control activities, information and communication, and monitoring control. Second, plan and perform tests of control. After we have understand the revenue process, we plan and perform the tests to prevent and to detect and correct the material misstatement, so that auditor we could rely on the control and testing the control, test the checks and balances. Next is set and document the control risk. Once we have performed, we document the control risk and set the achieved level of control risk from the performing test of control before. Next, I would present on a session for revenue cycle. accession involved in the revenue cycle, first will be occurrence. As we can see occurrence, the possible misstatement will be fictitious revenue and revenue recorded but goods not shipped or services not performed. In order to avoid it is by do contract activities such as segregation of duties for fictitious revenue and sales recorded only with approved customer order and shipping document. Proceed with numerical sequences of sales invoice for revenue recorded. Next will be completeness accession. The completeness accession is happen when to ensure that good ships that perform is recorded. There is a possible misstatement that good ship or service performed but revenue is not recorded. So to control it, numerical sequences for shipping documents and sales invoicement would ensure to avoid it, or shipping documents and matching the shipping document with sales invoices. Next, authorization accession. Authorization accession is when there is a misstatement of goods, ship or services performed for a customer who is a bad credit risk. So to control it, there are only the proper entity procedure will perform for authorizing credit and shipment of goods. Next, authorized price. There is a possible misstatement of unauthorized prices and unauthorized term. So to control it, unauthorized prices and specific terms of trade will be provided. Next will be accuracy accession. The possible misstatement will be revenue transaction recorded at incorrect amount. So to ensure the accuracy, authorized price list and specific terms of trade will be provided, or will perform mathematical accuracy in each sales invoice agree to shipping document and customer order. Then another possible misstatement is revenue transaction is not posted correctly. To avoid it, sales invoices reconcile to daily sales report or daily posting to sales journal reconcile with posting to subsidiary ledger. Next, cut-off accession. Cut-off accession, the possible misstatement for it will be revenue transaction recorded in the wrong period. So to avoid it, all shipping documents forwarded to the billing function daily and daily billing of goods will be shipped. Next will be classification. Classification, the possible misstatement will be revenue transaction is not properly classified. So to avoid it, provide a chart of accounts and provide proper codes for different type of products or services. Next will be identify the relevant audit procedure for the revenue cycle. Audit procedure involved in revenue cycle will be first observation. Observation occur when there is a segregation of duties, which to avoid the fictitious revenue. Next will be inspection of records or document. Inspection records or document could occur a session of occurrence, completeness, and authorization. For occurrence, possible misstatement will be revenue recorded but goods not shipped or service not performed. While completeness, goods shipped or service performed but revenue not recorded is the opposite. Next is authorization, goods shipped or services performed for a customer who is the bad credit risk, and shipment made or services performed at unauthorized prices or on unauthorized term. More on the audit procedure in inspection of records and document. In cut-off a session, the possible misstatement will be revenue transaction recorded in the wrong period. While classification also in the category of inspection of records or document for revenue transaction is not properly classified. Next will be a session, audit procedure for recalculation to get accuracy in mathematical accuracy, so that revenue transaction recorded in a correct monetary amount. Next, I will proceed to NAIMAH.
Thank you, Hanan. Now I will proceed with revenue case. Next. Okay, according to question 1, using the disclosures above as a starting point, brainstorm about the challenges regarding the internal controls that a company may face in doing business internationally. Okay, so among the challenges that a company may face is that services are not performed as scheduled, or that services may be performed but revenue are not recorded. There were also cases where services are performed on unauthorized terms, which then results to a mistake or fraud. Next, among the challenges of doing international business regarding to internal control are also revenue transaction recorded at an incorrect monetary amount of currency in which the international currency is different from the local currency. There were also challenges on revenue transactions recorded in the wrong period or revenue transactions not properly classed by countries. Next. Question 2. The company has disclosed its planned remediation efforts for 2004. How might the auditor use that information during the 2005 audit in terms of audit planning? Okay, so what the auditor can do from the 2004 information to be used in 2005 audit planning, the auditors can review issues that were discussed with management, such as control deficiencies or unadjusted errors, because these informations are relevant to the next year's audit and need to be considered when planning. The 2004 audit plan may be revised as the audit progresses, but it should not be viewed as being fixed in place once the main planning phase has ended. For example, a significant event may take place as the audit is in progress, meaning that the audit plan needs to be changed. I will pass to Naima.
Okay, thank you, Naili. For question 3, considering potential analytical procedures relevant to the revenue cycle that were discussed, identify what types of analytics might be applied in 2005 to provide evidence that the problems detected in 2004 has been remedied. So, the auditor, some of the analytical procedures that auditor can apply in 2005 to detect the problems that happened in 2004 is comparison of gross income percentage between year 2004 and 2005. The second is comparison of reported revenue to budgeted revenue. And the third is comparison of revenue recorded daily for periods shortly before and after the end of the audit period for unusual fluctuations. And the last one is comparison of details of services performed with revenue and consideration of whether revenues are reasonable compared to levels of performance and average services charged. And for the last question is, considering potential substantive tests of revenue that were discussed, identify procedures might be applied in 2005 to provide evidence that the problems detected in 2004 has been remedied. So for the substantive test, the auditor can apply. Uh, for the first for the first for for the services performance recorded in the services journal, watch the services agreement back to the customer acceptance agreement and performance documents. And the second is trace a sample of performance document to the details of the services agreement and to the services journal and customers account receivable subsidiary ledger. And next is examination of the amount recorded with the charges and terms on the service agreement. And the last one is compare the dates on a sample of services agreements with the dates of performance and the dates that they were recorded in the services journal. So that's all from us. Thank you.